what you really need to do is look in their accounting system for what the 12/31/15 balances are. So say this is actually that. Then I would compare these numbers against the balance sheet on the tax return. Guess what? A lot of times those do not match the tax return, and you've got to spend time figuring out what's off to begin with and getting the balance sheet in the books to match the tax return balance sheet for the start of the year. Otherwise, you're just going to continue to be out of whack because the balance sheet's going to be a rolling total of things, and it's just going to carry mistakes forward. So again, that's where I think, when people have started to use more and more, we don't see much QuickBooks Desktop these days versus QuickBooks Online. We really drive people to QuickBooks Online because it's easier to collaborate on, and you don't have to mess with sending the files back and forth as journal entries or stuff. It's gotten a little better than that used to be when, you give people their journal entries and they would never enter it. Then you come back the next year, you got to figure out, enter your journal entries from the prior years, and keep going. It was just kind of a backwards process. So a good starting point with them is to pull up the prior year ending balance sheet in the accounting system and compare it against the balance sheet in the tax return, assuming that you have those tax returns where they don't have the level of income or assets, where they don't have the balance sheet reported on the tax return. So you may or may not have that to go off of.